Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Liberty Global Ltd. Quarterly Report. Liberty Global Limited offers a wide range of services and businesses including broadband internet video services, digital video programming, audio services, fixed-line telephony mobile communications services, post-paid and prepaid business services, plus voice plus advanced data plus video, plus wireless plus cloud-based services, plus mobile and converged fixed mobile services, value-added broadband services, plus Wi-Fi features plus security plus antivirus plus firewall, plus spam protection plus smart home services plus online storage solutions, plus Web Spaces Connect Box, in-home Wi-Fi service, Horizon 5 cloud-based multi-screen entertainment platform, Horizon Go online mobile app. The fluctuation in Liberty Global Limited's stock price over the past year can be attributed to a combination of factors. The company's financial performance has been inconsistent, with mixed results from its quarterly reports. In Q4 2024 and Q1 2025, Liberty Global reported losses per share, missing analyst forecasts. However, in Q3 2025, the company showed improved profitability, narrowing its net loss. Strategic initiatives have also played a significant role in shaping the stock price. The successful spin-off of Sunrise in November 2024 resulted in a tax-free dividend to shareholders and led to an increase in the stock's value. Additionally, Liberty Global's asset monetization strategy has contributed to fluctuations, with the company targeting $500-$750 million in sales for 2025. The leadership change, with Dr. John C. Malone transitioning to Chairman Emeritus, may also have had some impact on investor sentiment and market reaction. Overall, these events collectively contributed to the observable fluctuations in Liberty Global's stock price over the past year, making it difficult for the company to maintain a stable stock price within a 4.1% fluctuation range. The primary drivers of revenue growth or decline at Liberty Global can be summarized as follows. Revenue growth is primarily driven by strategic acquisitions such as Formula E, $41.1 million, and Sunrise Services, $52.8 million, as well as organic growth from Telenet, plus $0.8 million. Additionally, the VM Otwo JV saw a revenue growth of 34.36, 2025, versus 3,512.7, 2024. On the other hand, revenue decline is primarily driven by decreases in residential fixed and mobile subscription revenue due to lower average number of customers and ARPU. Additionally, residential video revenue decreased by 5.4%, minus $8.2 million, while BeatWo billion non-subscription revenue also declined by $6.5 million. These trends highlight the importance of strategic acquisitions and organic growth in driving revenue growth, as well as the need to address declining subscription revenue through targeted initiatives. Net income and profit margins changes. A mixed picture. The company's net income saw a mixed trend between the 3 months and 9 months ended September 30, 2025 compared to 2024. While it decreased by $1.3 billion for the 3-month period, it increased by $3.9 billion for the 9-month period. This change from a net loss of $143.6 million in 2024 to a net income of $40.4 million in 2025 indicates an improvement. However, profit margins tell a different story. The company's consolidated adjusted EBITDA margin decreased by 1.6 percentage points for the 3-month period and 3.6 percentage points for the 9-month period. This decline suggests that despite the increase in net income, the company's profitability has actually decreased. The company's operating cash flow has been a subject of conflicting statements in its financial summary. For the 9 months ended September 30, 2024, it is confirmed that the company generated positive operating cash flow. However, for the same period in 2025, there are discrepancies in the reported figures. While page 1 and page 36 indicate positive operating cash flow, page 11 shows a negative figure of $142.2 million. The inconsistency makes it difficult to determine with certainty whether the company is generating positive operating cash flow in 2025. The company's debt level and interest expenses have undergone significant changes in recent years. Regarding the debt level, there is a discrepancy between two reported figures. Initially, it decreased from $9,145 million to $8,481.2 million. However, later on, it increased by 13.4% from $7,000 $372.20 to $8,462.2 million. The consolidated debt balance at September 30, 2025, was $8.5 billion. In terms of interest expenses, there is a notable decrease of 21.8% from 2024 to 2025. Specifically for the 3 months ended September 30, 2025, interest expense decreased by 19.6%, and for the 9 months ended September 30, 2025, it decreased by 14.7%. The interest expenses in 2025 were $413.2 million compared to $406.4 million in 2024. Overall, while the debt level has shown mixed results, there is a clear decrease in interest expenses over the past year. Regional performance varies widely. The performance of our company's regions has been mixed. On the positive side, Belgium and Luxembourg have shown strong results, while Ireland has also performed well. However, the UK and Netherlands have struggled, indicating areas that require improvement. These regional disparities highlight the need for targeted strategies to address specific market challenges. Management is optimistic about the company's outlook, citing a 13.6% increase in revenue for the 9 months ended September 30, 2025. They expect operating income to continue growing, with a significant improvement from a loss of $11.9 million in 2024 to $82.3 million in 2025. The Formula E acquisition is expected to provide long-term value to the company. Management is also focused on navigating risks such as international trade wars and tariffs, maintaining rates to subscribers, accessing capital for network development, adapting to changing consumer disposable income, and attracting qualified personnel. They aim to keep consolidated debt balance between 4 and 5 times adjusted EBITDA and anticipate seeking to refinance or extend debt maturities as maturing debt grows in later years. Overall, management's strategy is centered around driving revenue growth, improving operating income, and managing debt levels while navigating various risks and challenges. The company has made several strategic moves through acquisitions and divestitures in recent years. Acquisitions include the formation of joint ventures, such as Nexfiber JV and VM Otwo JV, where the company holds a non-controlling interest. The company also acquired Formula E, a race management entity, with commitments to fund its operations. Additionally, it formed another joint venture, VodafoneZiggo JV, with a 50% stake. On the other hand, the company has divested debt securities worth $0.9 billion and $3.2 billion in 2 separate transactions. These moves demonstrate the company's efforts to optimize its portfolio and manage its financial resources effectively. Concerns about inventory buildup and supply chain disruption. The company faces potential concerns regarding inventory buildup and supply chain disruption. Specifically, there is a risk of inventory-related insurance recovery costs totaling $27 million in 2025, which could negatively impact mobile revenue due to decreased handset sales. Additionally, the company may be vulnerable to strikes or collective action by employees, as well as international trade wars or tariffs imposed on products or services purchased from vendors or sold to customers. These factors highlight potential risks to the company's supply chain and financial stability. That concludes the financial summary for Liberty Global Ltd. Feel free to comment below, and I will be happy to answer them when possible.